Hello everyone. Thank you for watching CU Company's training, HMDA Implementation, Lessons Learned Along the Way. My name is Matt Doffing. I'm Content Strategist here at CU Companies. And with me today I have Ashley Holmes, our Compliance Officer.
Hello everyone.
We know many of you are likely well underway in terms of implementing HMDA. And so while we'll give you a brief introduction to the new requirements, we're largely going to take a look at how it affected us and how it affects you. So let's get started. Ashley, why don't you give us a brief introduction to this amendment to the Home Mortgage Disclosure Act?
Certainly. The Home Mortgage Disclosure Act requires many financial institutions to maintain, report, and publicly disclose information about mortgages. It was enacted by Congress in 1975. In 2011, the Dodd-Frank Act transferred HMDA rulemaking authority from the Federal Reserve Board to the Consumer Financial Protection Bureau on July 21, 2011. On October 15, 2015, the Bureau issued amendments to the HMDA final rule, which goes into effect on January 1, 2018.
So, Ashley, how does the rule compare to what financial institutions had to report before?
So one thing that they added was another aspect with regards to the definition of a financial institution according to the reg. They added the loan volume threshold, which now requires that if you've reported 25 or more home mortgage loans, that you are then required to report. And also if you've reported or originated 500 or more home equity lines of credit. Now, if you either don't originate home mortgage loans, but you originate 500 or more HELOCs, you are required to report, and then also the vice versa. So if you originate more than 25 or more home mortgage loans, but you don't originate 500 or more HELOCs, you're still required to report. Another thing that they did was they amended a lot of the current data points that are required to be reported. Some of them to take note of is loan purpose. They added the option cash out refi now, so that kind of affects if the purpose of the refinance for cash out was for home improvement, you would actually report that as a cash out refi versus a home improvement loan. One other thing that they changed was with regards to the GMI information, your government monitoring information that's on your loan application. They expanded those fields to include a lot more ethnicity and race options for borrowers to choose from. And then another thing too is they added a whole bunch of new fields that are required to be reported. Some of them to take note of are your automated underwriting findings. You're required to report those, the credit scores that's used in decision making, and then also the construction method of the house, whether or not it's site-built or manufactured home.
One aspect of the rule that confused me at first that I thought you could drill down a little bit, Ashley, is for the purposes of the rule, it's not a question of are you a financial institution. It's a question of the financial institution is actually a term within the regulation that has a definition. And so it's not just, yes, I'm a bank, therefore it applies to me because I'm a financial institution. There's actually a specific definition in the rule for that.
Yep, that's correct. And they also went on to also separate out whether you're a depository institution or a non-depository institution. So each of those types of financial institutions have their own requirements in order to meet the definition to report underneath the regulation.
Okay. So how can a bank or credit union determine if it is a financial institution under the regulation?
So the CFPB has provided a lot of helpful charts and guides to help a financial institution determine that. So they have a institution coverage chart that goes through point by point of the definition of a depository institution or non-depository institution to walk you through it. So, hey, did I meet the asset requirement this last year or the preceding 2 years? Yes, I did. Okay, go to the next point. This guide helps with that. And then basically if you don't meet one of the requirements, you are exempt from the rule because you don't meet the definition of a depository institution or a non-depository institution.
And just for our listeners, CU Companies did issue a bulletin to all our correspondent and delegated partners on the 5th, and we provided you a link to our HMDA Resource Center, which you can find at cucompanies.com/HMDA-resource-center. if you'd like to be walked through exactly how you can know if you have to comply with this regulation. Ashley, what parts of the rule most impacted you as our compliance officer?
So one thing that impacted me the most was just all of the new data points and the changes to the current data points that are now required, because we had to make sure that our loan origination system was going to be updated accordingly and timely to make sure that we were able to test in the system so we knew where all the information was coming from, and then also to make sure that, hey, can we automate things, and automating as much as possible so we can rule out any form of error. And then, of course, there were some data points that we weren't able to automate. Two of them, one of them was the AUS, automated underwriting findings. We weren't able to automate because it's based on when at the time of the loan the decision is made. And then also the credit score, because we don't know which credit score is going to be used in the decision making. Is it going to be your co-borrower or is it going to be your borrower? And then you have to report accordingly to that. Not applicable if you choose the co-borrowers, or not applicable for the co-borrower if you choose the borrowers.
Mm-hmm. So there was a place in the regulation where a functional term, we needed to define a term that was important to our policy and procedure.
Yeah, so one of the things I noticed in the commentary is that the Bureau uses the word review with regards to when an institution is required to report a loan. And they don't define that rule within the definitions of the rule. So what we're able to do with that is create our own definition of review. What does CU Mortgage determine how we review a loan, and in order to make sure that we either are required to report it or not required to report it. So we were able to take that definition and put it into procedures to know whether or not we report a loan during the loan process.
And that's something you've identified as generally a best practice where guidance is leave the term undefined.
Yep, definitely. So if there's something that's kind of vague in the rule and you're not sure how best to handle it, if the rule doesn't define a term, you usually can take the dictionary definition of the term, or you can define it yourself to best be used for your business and your business purpose.
One important question for our partners, as they do business with us, is who reports a mortgage transaction when one or more parties are involved? Yeah, so when one or more parties are involved, only one institution is required to report that loan as an origination. And the Bureau has determined that the person who reports the loan is the person who makes the credit decision. So for our correspondent channel, as an example, because we make the credit decision on those loans, whether or not to approve it, we then report that loan as an origination when it closes if we approve the loan. And then also if we deny the loan, we then report that loan as a denial because we made that credit decision. In the case where no origination occurs, how does it work in that case? So this is where the term review comes in handy. So for like a loan that's withdrawn during the loan process, it gets submitted to us. We start the process, get it submitted to underwriting, but then the borrower decides not to go through the loan. Because we reviewed the loan and sent it to underwriting, we are still required to report that loan under the rule. Now, if the loan was submitted to us and we didn't do anything with it, we didn't go any further in the process, and the loan gets withdrawn for any reason, then we do not need to report that loan because we didn't review the loan as we've defined. Okay. A connected question partners are asking is, what does this mean for me and my business with CU companies? Yep, so what this means is that CU Mortgage will report all loans in which we make a credit decision. So as stated before, if we approve the loan in underwriting, it closes in the partner's name, and we buy the loan, we will report that loan as an origination, as a correspondent loan. And then also, same if we deny the loan. We will report those loans if we actually make that denial decision. And then we've created this chart to kind of help you guys out with loans that are originated. Delegated loan partners are required to report all of their loans as origination. And then CU companies reports for all other ones because we've made those credit decisions on those originated loans. So what else should financial institutions know about HMDA? So something to make note of is 2017 data. Currently, right now, we are reporting
the current rules. No new data points have been added just yet. But before we were required to report to the Federal Reserve. Well, now that's changed. Now we're going to be reporting to the CFPB for the first time. The CFPB has implemented their own software, which is web-based. It is now currently in beta, so you can go out there and test your data to see if you meet the format requirements, and then just to see kind of how the platform works. And then once 1.1 hits, you'll be able to actually go in and submit your data to the CFPB. And this information can be found on their HMDA for Data Filers page on the CFPB's website.
And just for our listeners, you won't be able to click on the hyperlink that's in the video, but on the page next to the video, we will have a link to the CFPB's HMDA rule key dates timeline, which is where you can see, since you'll be actually turning in 2017 data after January 1, the CFPB has published a schedule for when each thing happens. So if you want to find that resource, or if you'd like to get questions answered about data or any other topic we've covered today, you can go to our HMDA Resource Center. Again, that's at cucompanies.com/HMDA-resource-center. In addition to answers to frequently asked questions, we'll have links to CFPB introduction videos, as well as a history of what the CFPB has said in the past about HMDA. Just a note, if you're returning to the HMDA Resource Center after January 1, we do become the Servion group next year, and so our URL will change to myservion.com. Everything after the / will remain the same. So thank you, everyone. Thank you, Ashley, for your thoughts. Thank you to our audience for watching this training video. If you need more resources or have additional questions, we do have a Contact Us link on our HMDA Resource Center. Thank you.
Thank you.